Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway. Let's get started today. What we're looking at today here is Yahoo, YHOO. And again, what you can see here is the stock is down 3.36%, $1.74. And this is not a surprise that this is falling. In fact, I've talked about this for quite some time as being a pullback candidate. The pullback, believe it or not, could take you as low, and this is where I expect it to go, down to around the 44 to the 45 area. See the 50 MA down there? Now, again, it's not going to go straight there, but that ultimately will be the pullback. Now, what I want to do in this video is talk to you guys about how I knew the pullback was coming on Yahoo. And very easily, the best way to do it is to go to the intraday chart and walk you through that, because that's where the signals were. And this is the intraday 10-minute chart on Yahoo. And if I zoom out, you can very clearly see this massive run-up it had in November. All right, and then towards the mid to late portion of November, we put in a little bit of a top here, and then you had this pullback, and then you started to trade back up, and a lot of people were very bullish over here. The media was bullish, CNBC crew was bullish, saying, oh, Yahoo's going to $55 to $60 to $65, but the charts were not showing that. What you were seeing here is as the NASDAQ 100 was hitting highs, and if I flip over to the NASDAQ 100, take a look. NASDAQ 100 kept going up and making new highs. However, Yahoo, take a look at Yahoo again, was stalling out, and it was unable to take out this short-term high. So again, in reality, what you got was a pullback from this high to this low, and then all inside bar consolidation, which is actually a bear flag. All right, it's called an in spirit of bear flag, which obviously bear being the symbol there that tells you it's going to go lower. So again, notice how you had this top here and this pullback. And it doesn't seem like a significant pullback, and it's not, but it's the consolidation that follows it that's all inside of that move. If you look at this high here and this low, okay, from this high to this low, all this action was all inside of it. And ultimately, you could even draw a trend line from these lows here, which is actually a beautiful little trend line. And you can see on Friday, we actually started to break down. All right, if I zoom in a little bit, you can see on Friday you actually got below it, consolidated, and continued down into today. So even on Friday, you could see that it was beginning to break down. But the point is, again, very simply put, folks, is that while the media, while average investors were talking about buying it and buying it, there was distribution going on. Distribution is where institutions are selling it to those buyers. And they're looking to kind of take off their money while the amateurs are buying in on the media hype. And that ultimately could be seen right here because you couldn't take out this high. And remember, the most important thing here is that it's one thing to see the consolidation on a bearish side, but then compare it to the NASDAQ 100, which was making new highs. I mean, look at this, just straight up. And if it can't make a new high when the NASDAQ is ripping higher, then that has to be a secondary signal there. And ultimately, Yahoo, again today, guys, taking a beating, trading down at $50 per share. As I said before, the target is ultimately down far, far lower. It may not go straight there. You may even get a small bounce off the 20 moving average here, but ultimately, it's going to go down to about the $44, $45 per share level. All right, guys, if you're interested in trades like this and others, come join us at InTheMoneyStocks.com. Join the Research Center. Take the 7-day free trial. If you're more into options alerts, then take the options alerts, guys. Take care. Have a great afternoon. Enjoy this market. Lots of volatility, lots of profits to be had. Join us here at InTheMoneyStocks.com.